there's this whole idea of what people say and what people do
Yeah.
are very different across life, and I think in the investment world in particular. I could say that I'm bearish on equities, but I could still be buying the S&P every chance that I get.
Hello, everyone, and welcome to this week's podcast for the week ending Friday, January 19th. I'm joined here by Will Gibson. My name is Miles. We'll be going through the podcast for this week.
Yeah. We were just talking before we started recording that there's more to talk about than we first expected. Because this morning we're like, oh, we'll do the podcast at 1. What are we going to talk about? I don't know. And then we started thumbing through charts, like there's actually a lot to talk about.
Yeah, there's a lot of stuff going on, and the kind of the outside of the domestic equities, I'd say S&P 500 for the last week, down about 65 bips. That's all. But outside of that, you've seen emerging markets. That's some China stuff. Maybe we'll
Yeah.
talk about that in a bit. Emerging markets or EEMs down about 6.5%. Russell 2000, so some small caps are kind of falling out of bed a little bit here. Only a couple names in positive territory, that being the US dollar and
Crude oil. Yeah. Yeah. Past week, crude US dollar only areas up. For the past 30 days, the only area up is the US dollar as well, which I think some strength there has been an issue for emerging markets. China, like you
Yep.
mentioned, I think being a pretty big issue for emerging markets as well. But maybe before we, or if we haven't any more to say on that, like some of the major charts, Miles and I do the morning videos throughout the week, and we have like these kind of set macro charts that we like to run through. When we were just talking about it before we started recording, fair amount of change. So the Dow finally reversed back into a column of O's.
Yeah, it's a
On
pretty big column of X's, we could say.
huge column of X's. If Ian had it, he'd probably tell us how many X's in the last time that it happened, but he's not here, so we don't know. But reversed into O's. Last time the Dow was in O's was October of 23, which is a long time ago. Like we're not talking yes, sell signal, like we're like column of O's, which is very short term. October of 23.
Yeah, and that's pretty interesting because throughout the last quarter, really throughout 2023, it wasn't the Dow's year. I mean,
Yeah.
it was up
Yeah.
just like the rest of the markets were, but I mean, paled in comparison to the
Yeah.
Nasdaq Composite, paled in comparison to Nasdaq 100, S&P even it
Yeah.
underperformed. So to sit there and say, hey, look, you got a straight column up of X's, 27 X's. I
You
counted. Well,
counted.
yeah, the 27 X's. That's a pretty long stem for somebody who wasn't the leading index.
Yeah, yeah. Another one that caught my eye on the charts this week is going to be the AGG. We saw that return to a sell signal yesterday. So Wednesday, the AGG returned to a sell signal. For the past year going on, yeah, for about the past year, it's been pretty consistent signal history. So buy signals lead buys, sells lead sells. Last time we returned to a sell signal was May of 23. So I think that's going to be an interesting one to watch, especially with the rhetoric that there's been about, oh, maybe we're not going to be seeing as many rate cuts as the market had expected going into 2024. I think there's some economic data this week that has fueled that narrative a bit more. Jobs, employment generally has been a bit stronger. Housing data has been stronger. Retail sales, I believe, were also a bit stronger than expected. So all around kind of supporting that higher for longer narrative and maybe fewer rate cuts. So that's something to watch for the AGG.
Yeah, I want to
Rates.
go back to something you said because you learn something new every day. I've been doing this for a couple of years. You've been doing it for longer, so always
Not
kind
much longer.
of. Well, I won't age too much there, but point is to look back at the first time that we returned to a sell signal, not the first sell signal that was, or the last sell
Yeah,
signal
yeah,
that
yeah.
was printed. But that's an interesting way to look at the charts a little bit that I don't typically do,
Yeah.
just to be candid. So I'll make sure to add that maybe into my repertoire of analysis.
It's yeah, it's not like a rule that I have, but when you see these like runs of sells and buys, I like to say, well, when was the last time like the technical narrative changed?
Right.
Not necessarily what was the end of the last narrative, but what was the last time that technical story like changed from a buy to a sell. So yeah, that's something I like to do with charts that tend to trend like that. What else do we got? I mean, I think crude oil, we talked about bullish triangle this week coming off a pretty big area of support. Seasonally, typically starts to be a good time of the year for crude oil. It's
It's a
got a
little
nice,
chilly outside.
yeah,
Here in Richmond, we got some snow. Almost slipped on the walk over to work, but yeah, it's
yeah,
a certainly demand for heating.
I took a 2 hour delay on Tuesday. I just started from the house, which was great. And I was like, I don't know the last time that we've gotten like a real snow in Richmond. It's been a long time.
Richmond, I don't know. We both went to school with Christopher Newport, so
Yeah.
I mean, we didn't get
That's
a
like
big
close to Virginia Beach for if you don't know. So
right.
you're
So
not getting snow.
right off the water, you're not getting any snow. I can't think about the last. And Richmond, I haven't lived here during the time
Yeah,
we've gotten big snow.
I know.
Really go back to maybe like 2015, 2016, like back
Yeah.
in high school for me.
I would love to see it happen though. I miss the snow days. But yeah, as for crude, I think what a transition back to crude oil. But as for crude, bullish triangle coming off a big area of support. I think that's something to watch. I know typically people will say triangles are continuation patterns, which
Yeah.
would suggest crude oil is moving lower. Just with that big support nearby and the seasonal tailwind, and maybe some of the inflation's not dead narrative. I think there's some life there. Natural gas had a tremendous
Wait,
week.
where are you getting the triangle that's moving lower? I see that buy signal there at 75. Now we are in a downtrend. I think
Yeah, that's more of what they're saying is like triangle patterns are typically continuation of the
of the
overall trend.
trend.
I mean, yeah, that's semantics, but
Yeah, so we'll see. I mean, point is, we're in a downtrend at this point, kind of down and to the right, lots of resistance up above, but we have that seasonal aspect. I
yeah,
have the other side of the coin where it's a little shorter term. Hey, that triangle pattern is a continuation of
yeah,
that upward movement. So we'll see.
that's fair. That's fair. Other notable moves we talked about emerging markets, EFA still holding strong. Gold returned to a sell signal. That's still at multi-year highs. I think with, as I was mentioned before about interest rates, if the expectation is for those to hold a bit firmer, maybe not come down as much, that's going to hurt gold prices because as we like to talk about, gold with any investment, there's a big opportunity cost. Gold doesn't yield anything.
Right.
So when you have high yields, that's going to pull people towards something safe like treasuries, compared to something like gold. So that's a development. Really nothing changing there other than just kind of rolling over maybe
Right,
at those
not yet.
highs.
Not until we get a little bit probably more clarity about that higher for longer narrative. If we get a hot inflation print or something like that, maybe,
Yeah.
or some more Fed speak
Right.
that confirms that. Maybe we'll see some continued downward participation. But within commodities in general, energy continues to fall out of favor within the dollar rankings, and overtaken actually just today by precious metals. So we'll see kind of
Okay.
how that
Yeah, plays
relationship
out.
continues to go.
Yeah. Any other charts that caught your attention? I know there's a fair amount others like equal weight S&P, cap weight S&P, Russell 2000, I think are all worth a
Yeah, I mean,
discussion.
take your pick of the litter. I think the other thing that we didn't touch on before, but I think is worth mentioning, is a lot of our indicators for, you know, the Nasdaq 100, for the NYSE, for the S&P 500. A lot of our broader based indicators are reversing back down, like the BPs, for instance.
Yeah.
So for those of you who aren't familiar, we've got these things called bullish percents that are measuring the percentage of stocks within a specific universe on PNF buy signals. Otherwise, what's the percentage of stocks within the S&P that are on buy signals, which we like to see, right? And so when the market is rising, typically that indicator is as well. And then you get reversals back up. It's kind of like an oscillator. We can throw it on the screen, right? But you can see
Yeah.
reversals back down and back up, that kind of show some maybe near-term signs of weakening
Yeah.
in the cards. So all things considered, with this pullback, we're starting to see a couple different signs emerge. I will, especially for the Russell 2000, think you had a good point, right? For the Russell 2000, reversing back down, testing its kind of 50-day moving average. Any more than that is a bit of a concern. Maybe not a concern, but a point of note.
I think what you're getting at too is like the Russell 2000 has been in this big range for a while. It ran the hardest at the end of last year, has pulled back the most to begin this year, and like you said, it's right above its 50-day moving average now, and also right above the middle of its 10-week trading band. So we were calling for price normalization. We're calling for a pullback. That has technically come
Yes.
at this point here. So if you get more downside from here, maybe the story is actually changing, and this is more of just a normal exhale.
Yeah, because a little scattered brain, I talked about the participation indicators and I went right over to small caps. The point being is that we are seeing the pullback that we called for here. Now we need to see to be constructive, reversals back up. Now we need to see, hey, let's hold where we are. I don't want to keep going
At least
down.
for like smalls and equal weights, I
Yeah,
think.
yeah.
Wait, which is so funny to me because I know we were talking yesterday in the office, like some like stock market crash was trending
Short
on
trend.
Twitter. And let's keep in mind the S&P year to date is down 64 basis points.
Yeah.
Yes, it had a 9-week streak and that ended. And I think people have, come off the horse a bit and gotten a bit more concerned. We can talk about how that's showed up in some of the sentiment surveys this week, but overall, this has not been some like material big exhale for the market. It's been more of just kind of consolidation for the past 2 or 3 weeks. And in some cases, like small caps, that's been a bit more severe in terms of downside.
Right. Yeah, no, I agree.
Yeah.
Don't have too much else.
Something else on the participation. Sorry, I'm just jumping back and forth. You're seeing a lot of those roll over at prior highs. So
Yes.
levels that you saw participation top out at before, like you brought up the bullish percent for the S&P, you almost hit 80% many times throughout 2023, and we got to that level again, kind of rolled over. So again, that's just some short-term signs that some soldiers are beginning to exit the field.
We'll talk about a stock that isn't participating before we talk about the sentiment stuff.
Spirit.
But yes, Spirit or Boeing or
Yeah.
go ahead and name any airline. I think it's a lot of fun. Spirit is one that if you pull up on the platform is probably going to look like a little bit of a glitch on its default chart as it continues to fall after a oh yeah, look at that chart. As it continues to fall after that JetBlue merger was blocked. But
Funny for us, unless we actually owned it, and then it would not be funny.
Yeah, then that wouldn't be so great. But it's down cool 62% this year. So maybe one to avoid for the time being until we find some technical footing. But Boeing, listen, you and I were talking before the call.
We've brought up Boeing.
I don't want to like it on this reversal we're getting back up today, but man,
yeah,
I kind of do. Yeah.
If Boeing's attribute rating were to have held to at least a 3, this would have been a lot more interesting to me. And I think you and I talked about it. I think mainly you and I talked about it. Maybe Ian and I talked about it with someone as well. If you covered up the attribute, covered up the chart name,
I know.
with the reversal today, not bad.
Now bouncing right off the bottom of the trading band there, no resistance until, I mean, we want to call it maybe some old 2023 highs around 240, 228, maybe like the mid 230s acting like some resistance. But I mean, you've got a lot of room to run here on this one. But technically we can't like it because it's a one.
Yeah, I mean, technically, like I said, one attribute stock. This, I think technically here would be more of like a sell on rally opportunity to maybe de-risk out of a position. But like I said, cover up the name, cover up the attribute. Like I'm talking out two sides of my mouth here, but cover up the name, cover up the attribute, short-term opportunity. Maybe that's in case. Now, if this thing rolls back over lower top, I think kind of all bets are off.
And then you kind of established, hey, this is the direction we're heading in now.
All right, I would love to jump into some of the sentiment stuff because I think that's been really interesting over the past week. When we mean sentiment, investor sentiment, like what people are thinking about the market. We talked about to begin the call a lot of charts that started to roll over, whether it's Russell 2000, equal weight S&P, the AGGs come down. So kind of across asset classes, you've seen some price weakness to start 24. And again, as we said, it wasn't to be expected, but you have seen sentiment start to dwindle. And there's a lot of different measures of sentiment. We'll talk about a few of them, but maybe the one to start with, like the AAII numbers. Everyone likes to mention those. I think those are kind of closest to home because it's the American Association of Individual Investors. 48.6% of respondents thought the market was going to be up 6 months later. That was a week ago. This week, 40% of respondents think the market's going to be higher 6 months later. So you had an 8.2% drop in bullish respondents. And I've been doing some data for the feature tomorrow that I'm going to write about this. An 8% weekly drop is more rare than you'd think.
Really?
Yeah, it's like a 75th percentile move. So not crazy. It's not like a 90th percentile move that we're going to run studies on it, but 75th percentile move, meaning if you had 100th percentile, that would be the biggest week over week bulls decline that you've seen. So 75%, 3/4 of the way there, pretty significant. In terms of forward returns, again, we didn't run anything like that. Typically, sentiment is best as a contrarian at the extremes. So if you get really euphoric or really bearish, that's when it's most helpful. Where it is right now, not so much of a big contrarian signal, but it's a pretty big change. And it makes sense when you see prices roll over, sentiment tends to follow.
Yeah, I think that makes a lot of sense. And just for a bit of historical context, that 40.4% bullish reading. So
Hmm.
even with that drop, right? Which you mentioned 75th percentile drop, we're still above the historical average, right? And I think this makes
Good
sense.
point.
We're
Yeah.
coming off of a big year for the markets in general. People are still, I won't say euphoric. Maybe they're a little bit more cautiously
Sure.
euphoric now that we've seen a bit of a drop to start 2024. But all things considered, I think people are still eyeing more of a soft landing, no landing type of
Oh
deal
yeah.
than they are the other, where we may have found ourselves maybe to start 2023.
Oh yeah, I think that's totally true, and that's a good point that it's still above the historical average. To your point about the whole like soft landing, no landing, maybe that's alluding to the Bank of America survey also came out this week. The Bank of America Global Fund Manager Survey.
Right.
There were a lot of really interesting charts that came out there. One of them, which I think caught my attention, was the respondents' thoughts on large caps and small caps.
Right.
They said, and we can throw this chart up again. This is from Bank of America. It says for the first time since June 21, large caps are expected to underperform small caps. The chart showing the percent of respondents who think large caps will outperform small caps in the next 12 months. So pretty interesting chart. There are some other interesting charts, and that again, all around the idea of investor sentiment that I think are really interesting and related to what's going on.
Are you saying that people don't think Nvidia can have another crazy year or Meta can double? Are you thinking that, or are you saying that?
Yeah, I mean, Nvidia. I feel like we could just put news blurbs like all the way up on the column of X's. Just like overbought, more overbought. How much higher can it go? And it just
Yeah.
keeps going.
But Jamie, one of the other analysts in the team, he doesn't hop on the podcast as much. But I mean, he said it feels like people have been saying like, "Oh, now is small caps time to run," because large caps have taken this whole bull market that we've
Yeah,
had. If you want to say there was a pause in there, whatever. But
yeah.
large caps have been taking the market by the horns and running with them, and small caps have just kind of been
Hmm.
there, not necessarily underperforming, overperforming for long periods of time, but people have been saying, "Oh, now it's small caps time," and
Yeah,
it
small
hasn't.
cap, equal weight,
Yeah, and it has.
international for a while. It's like, oh, now the time, they've been out of favor for a decade. Like now is when it turns around type thing. And you've had some spurts, but really nothing continuous. So
Yeah, I mean, you're not going, at least in my opinion, is you're not going to get that as long as tech is running the show, right? Because the
it's just
tech,
such a big weight.
yes, it's such a big weight. And that's why momentum, this is off topic a little bit, but this is why momentum stuff will not necessarily kind of uh, kick their tires
Hmm.
when tech is doing well, because it can still gravitate towards tech,
Hmm.
but it can't necessarily overweight tech at the direction that it needs to
To get a
in
bunch of
comparison
alpha.
to
Yeah.
2022, right? I mean, you look back at 2022, you were able to underweight tech, which just sucked, and overweight energy. And that's why it was a good year for momentum versus 2023, great year for the market, okay year for momentum. Why is that? Well, because we couldn't overweight tech much more than you already do when you're just
Yeah.
buying the market.
Yeah. You get a call.
Now, yeah,
Do you
well,
need to take that?
yeah, I'll take it right now.
Take it on the podcast.
I don't know, but that was a whole
No, yeah.
rampage about
I think
momentum.
that's an important point. There's actually a lot of great tie-ins to momentum like that, but also like momentum behaviorally and how it's additive to investor behavior and like investor sentiment because it tames a lot of those emotions. Something I was going to say though, on the topic of investor surveys, and I'll say more about this in the future tomorrow, but keep in mind like sampling bias,
Yeah,
there's responding bias about who chooses to respond. There's this whole idea of what people say and what people do
yeah.
are very different across life, and I think in the investment world in particular, I could say that I'm bearish on equities, but I could still be buying the S&P every chance that I get
Right.
because being bearish can sound smart and thoughtful and prudent, and sounding bullish is uh,
Right. You're just always, yeah.
just blind faith. Yeah, so a lot of other things, but so with these surveys, take it with a grain of salt because what people maybe are saying they might not be doing.
Yeah, no,
Because
I think that's good.
say if tech Mag 7 just continues to run in your face. People may hate it and they may say they don't think it's going to keep going, but they might just keep buying it.
They're gonna keep buying it. Yeah, I mean, that just is what it is. You don't look at the numbers that the Magnificent Seven put up and then not, and then you'll see those sentiment numbers. We were talking about it. price follows sentiment, sentiment follows price, kind of which comes first. But
Yeah.
point is, I mean, if we continue to see the market maybe shake off some of this weakness that we've seen to start the year, again, have to put it into reference. S&P 500 only down about half a percentage point
Hardly down.
for the year. But point being, if it feels like that, then you'll see that sentiment number jump back up. I mean,
Yeah.
it's just how it's going to be.
Oh yeah. It's the business we work in. All right. Well, you got anything else for the week?
No, but one other stock I wanted to mention, just for a little bit of not just an individual stock, but maybe how the economy is doing in general is JB Hunt. And they got they come out with earnings after close today. So by the time this comes out, they'll already have reported. But they've got a pretty interesting technical picture reversing back up today. I know we're jumping off topic, but point is 3 for 5, reversing back up 2 consecutive buy signals in a positive trend. And, outside of the technicals, right? You're talking about transports in general.
Yeah.
Consumer spending has been very strong. That's what the bulls have always gone back to. Consumer spending, consumer spending, consumer spending, right? So in terms of looking at companies who have their hand on the pulse of consumer spending, it's how much stuff are we shipping around the world? How much stuff are we shipping around the nation, right? And so watching stuff like JB Hunt, like Old Dominion, I think that's typically maybe a good indicator of consumer spending than the economy in general.
Yeah, and Miles covers industrial, so this makes sense why it's front of mind.
Yeah.
Looking at the transports.
Yeah.
There is the Dow transport theory though.
Yes.
Which is in line with what you're saying. So it does pay. It is worthwhile to monitor the transports and how their earnings are, commentary, and then more importantly for us, the technical follow through.
Yeah. Anyways, that was just a random stock to throw in there at the end, maybe a little off topic, but
nothing's off topic. We didn't really have an outline, so anywhere's good. Well, cool. Think we close it out. Cool. All right. Well, thanks everybody. We appreciate the time this week. Miles, enjoyed chatting with you. We will be back again next week. If you have any questions in between, don't hesitate to reach out.